Hello everyone, how are you all? Hope you are doing good and I'm good as always. So in the past few days I was really busy. Not exactly busy, the laptop wasn't working properly. There was a charging issue. And let me tell you, I'm not going to eat your time. I will complete this syllabus as soon as possible by August 10th or 12th. I will give you schedule. And again, please like, share and subscribe to the channel. There are few things I need to talk about. For every chapter, there are MCQs and true or false questions. I am going to skip those MCQs and true or false questions for now. After completion of all, practical problems, later we'll come back and complete all these MCQs and true or false questions. Okay. At least we are not going to leave true or false questions. Those are very important. I checked the model test papers and there was like out of six around at least one or two are repetitive straight from the material minimum to minimum. 4 marks is very good. Also, since these are practical questions and the video is going to be lengthy, I will pause the video in between. Hope you do not mind about it. And I have prepared notes for myself so that I can explain you better. Keep notes with yourself, keep calculator with yourself. I don't have one. Oh, sorry. Okay. I'll use laptop calculator for now. I'm going to upload so many videos right away. Since there won't be any issues in the next 10 to 15 days, I'm going to upload all the videos. Let's get into the subject. I 1 minute. Sorry. So we are going to talk about chapter 2, unit 1, journal entries. And further, before we have to talk about accounting process. Accounting process starts from, I'll tell you, okay, let's talk about system entry. First, journal entries, then ledger accounts, then trial balances, then 1 minute, okay. Adjustments, then final accounts. So, how do you prepare journal entries? Basically, if you are a non-commerce background student, this is the entire process of accounting. Okay, we are going to finish these in chapter number 2, and this is chapter number 7. So, what exactly journal entry? I will tell you what exactly is journal entry later. But in order to prepare journal entries, we have to have source documents. What is source documents? Source documents like bank statements, sales invoices for sales, purchase invoices for purchases. Whenever we get source documents, we prepare journal entries. Okay. After preparing journal entries, we prepare lecture and then trial balance. Based on trial balance, we prepare final accounts with some adjustments. Okay. I will give you one spoiler. You are going to get so much hurt in current scenario. In practical world, if you make a journal entry, lecture will be done automatically, trial balance will be done automatically, final accounts will be done automatically, and balance sheet will get tallied. Oh my God, sir. In CA exams, we never tally balance sheet. How come balance sheet is going to tally in the practical world? Because because of the missed logic. The logic we always miss misconceptions. Actually, there are one minute, uh, there are two types of accounting systems. Keep notes. Okay, right away I'm writing. Please. If we complete by August 10th or 12th, for September students, September attempt students, you don't much have time for the revision, so please be focused here itself. I mean, there are two types of accounting systems. One, single entry. Two, double entry system. We talk about single entry system in later chapters, okay? This is also called incomplete records. Yeah, sorry. In double entry system is the foundation for the accounts. Have you ever got doubt that how do we check the profit? Why is the balance sheet balances like what is the purpose of the balance sheet? Okay. For example, close your eyes and if there is uh, what is it, some proprietor or someone, they come to you and ask you, sir, what is the profit? That is enough. Okay. Like, what exactly do we need to do in order to calculate profit? Whatever they do the sale minus purchase. Okay. Minus if there are some expenses like rental expenses, interest expenses if they have taken loan. So it is the profit. Is like this is enough for them, right? But ask yourself if it is really enough because this is not. Imagine there is interest expense in here. Why do we get interest expense? If we have taken loan from someone or some bank, okay, how much loan have we taken? What is the proof? The proof is the balance sheet, which is why balance sheet always tells you about the position of the business. Hope you have understood the concept and there are approaches. There are approaches of accounting. Two kinds. Hope you have you know about this traditional approach and this traditional and wait, I'll check modern approach. Huh? Is it right? Okay, let's see modern approach. What is traditional approach? Traditional approach talks about the golden rules of accounting. What are the golden rules of accounting? There are three. What are three? Nature of accounts. Those are PRN, personal, real, nominal. In personal itself, there are three other bifurcations like N, A, R. N means natural, artificial, representative, personal accounts. So let's keep, for the timing, let's keep this aside, okay? Just write this, but keep that aside. What are the rules? I cannot explain you the rules. You have to understand the rules because I cannot explain why B comes before A. I mean, before, no, after. Yes, why B comes after A. That is the rule they have written. Okay, we cannot explain that. So there are two kinds of accounts. Hope you know about this, debit and credit. And for nominal also debit and credit. Debit, the receiver. Credit, the giver. Here, for real account debit, what comes in? What comes in what? What comes into the business? Credit, what goes out? Do not worry, just stick with me. I will give you one exceptional tip. What goes out? Just read this and follow my tip. Debit, all expenses or losses. Credit, all incomes or gains. Let me tell you the tip in the next page. We we are going to love that. So, if you don't know about this, I will tell you final accounts right now. Final accounts means financial statements. There are three: trading account, profit and loss account, and then there is balance. So, the tip is for trading account, uh, these are debits, these are credits. Direct income, direct expenses come here. For profit and loss, indirect income, indirect expenses come here. For balance sheet, assets come here, liability come here. Okay. So here comes the tip. Just keep this in mind and write this. For both any account that comes under trading or profit and loss, those are of nominal in nature. I will again write in the next page so that you will be keep writing these. Okay, please keep writing with me. I just can explain you orally and do not even have to write this, but I'm writing with you so that you spend time with me. Okay. For balance sheet, these are nominal in nature. I will explain you later. For balance sheet for liabilities, mostly personal accounts come here. For balance sheet assets, mostly real accounts come here. I didn't tell you for sure. I told you mostly. Write this. Again, I'm preparing final accounts, trading or profit and loss account, debit, credit. 1 minute. Balance sheet, assets, liabilities. Okay. I mean, let's talk something fair. Do you love accounts? We don't like accounts, right? We want chartered accountancy, but I mean, to be fair, who chooses the career in accountancy? I mean, imagine if you are a kid, just close your eyes and whenever your teacher asks you, what do you want to do in the future? You'll be like, I want to be a mother, father. No, apart from that, uh, scientist, hero, villain, KGF. But I don't think any of you could have possibly picked accountancy, right? So, since you hate account, just cancel this. That's the answer. Okay. Sorry, I skipped something. Why are we canceling this? We'll talk about this in the later part. Keep space here. We'll discuss something here. Okay. Uh, Basically, these are nominal. These are personal. These are real. There are exceptions here. There are extremely rare exceptions here. So, if in draw or false or somewhere, if ICAI asked you some account and asks you whether it is nominal or real or personal, if you do not know the answer, just close your eyes and just find out where it falls. Okay. Whether it is a liability, whether it is an asset, whether it is income or expense. If you feel like it is a liability, just write personal account if you do not know the answer, because 90% of the liabilities come in personal accounts. Okay. Why did we cancel? We cancel because, oh, one more thing. How about exceptions? I will tell you exceptions later. In real, see, except especially in assets. Okay, there are exceptions more in the assets, not much in the liabilities. For liabilities, just write personal accounts. For P&L and trading account items, just write normal accounts. But for assets, for exceptions, every exception have personal account, not nominal account or real account. Real account is obviously asset. Hope you have understood this. Next, modern approach. This is where we are going to build our foundation. This is where we are going to understand the logic. There are five types of accounts. Wait, let me check. How I have prepared this. Balance sheet, capital assets, total liabilities. Okay, working capital. Okay. Basically, there are five accounts in financial statements. Incomes, expenses. This is not rocket science. Okay. Capital, uh, liabilities, assets. If you cannot understand anything, oh my God, sir, what are these words? I've never seen anything like this. Just to draw the financial statements, income, expenses for for balance sheet, capital, liabilities, assets. Okay, these are the five items in the modern approach. Okay, if you do not even understand single word, I cannot help you because we have been talking about this. Oh, sorry. So, sir, why did we start hating accounts? Because all the debit balances are expenses. Since we crossed this, assets are also debit balances. Let me draw this again. P and L, debit balance, credit balance, balance sheet, assets, liabilities. Since we started hating the accounts, we crossed this. So the debit balance is expenses, right? Expenses are debit balances plus assets are debit balances. Okay, these match. Expenses and assets are debit balances. Incomes and liabilities and capital are credit balances. Just write this, just note this. Okay, this is very important. Is that what I have written? Okay. Another thing very fundamental, but still it is my responsibility to tell you. For a balance sheet, there are three items: capital, liabilities, and assets. Right? Balance sheet always tally. So these are the three items that come in the balance sheet. For capital accounts, how do you calculate capital? Actually, first thing, one more thing, balance sheet is on as on date. What do you mean by as on date? As on date means as on that specific date. I mean, do you know cash comes in the asset, right? Just close your eyes. By 31/3/2026, cash would be 500 rupees. How about on 1/4/2026? It could change. 29/3/2026 could change. Not could change. It'll definitely change. So, as on that specific date, what are the balances that is represented by the balance sheet? So, there is some concept that opening capital. I will explain you. Just keep writing this. Less introduced capital minus drawings less profit during the year minus, if any, loss during the year. Okay, write this. Sir, oh my God, this is so much English. I do not understand a single word. Neither do I. But it's my responsibility to explain to you. The balance sheet always represents closing balances. Sir, what is closing? What is opening? We'll talk about this in the lecture chapter. Okay, closing balances means, for example, 1/4, we have preparing periodicity concept. We have preparing accounts from 1/4/25 to 31/3/26. The balances that stay here are closing balance. The balances that stay here are opening balances. Okay, hope you have understood. So the balance as on 1/4/25 is the opening capital. Opening capital plus. Oh my God, I do not even understand my language. Introduced capital. If you have invested more into the business, is introduced capital minus drawings. Drawings means we withdraw from our business. Profit during the year or loss during the year. Profit is added to the capital. Loss is reduced to the capital. Is the closing capital, right? That is what I have written. All balance sheet balances are closing balances. Why closing balances? Because of this. Okay, these are closing, these are opening balances. Please do not ask me why always, because I do not even know. Well, actually, I prepared very little less in the notes. I just completed one page and 24 minutes is done. Is gone. Hope you are not bored about this. I'm not. I'm excited actually. So another concept here. What is the concept? What is the concept? What is the concept? I forgot. So which is why I written. Let's play with the debit balances, credit balances. For every debit balance, let me say what are debit balances. Remember the cross. assets and expenses are debit balances, incomes and liabilities and capital is credit balances. Okay. Sir, asset is debit balance. What do you mean by asset is debit balance? The default nature of an asset is debit in nature. Okay. The default nature, the nature of such account is debit in nature. The nature of accounts are bifurcated into two things, debit and credit, right? So I tell you why balance sheet always tallies in NGO charter or whatever. Just stay with me. So the for every debit balance, which is an asset or an expense, wherever you see in any of the accounts, whenever you see something is debited, it is either an asset or an expense. But there is an exception. So in order to increase the debit balance, we debit the debit balance. Right. In order to decrease the debit balance, we credit the debit balance. My God, sir, what is debit? What is credit? What is this rubbish? I don't know. For every credit balance, in order to increase the credit balance, we credit the account. In order to decrease the credit balance, we debit the account. Okay, I will tell you the logic. First, a debit, first place, in order, the value is +1. In order to increase the value from +1 to +2, we add +1. Okay, here plus is debit. Plus is debit. In order to make the amount to 0, we -1. Okay, this is the logic. This is minus balance. In order to increase, -1. In order to increase, -1. In order to decrease, +1. This is the logic. Again, I'm telling you, this is very important. Just read this. Just try to understand this. This is the foundation of the accounting, and you're going to love the subject if you understand this properly. If you understand, as many lecturers do, I did not emphasize more on traditional approach, like what do you say, nominal, personal, real accounts, because I know those are very beautiful, very respectable things, but this is easier way to understand. Okay, let's not brag. The time is very tight. Oh my God, we have come to illustrations here. Illustration one. Oh, sorry, my face is awful. Oh, nice. 1 minute, please bear with me. What is this? So the first question, following. Oh, okay, okay. Right, it's fine. The following are the transactions entered into by so on. So after starting business, show how accounts will be affected by these transactions. There are 5 transactions, right? R started business with the so and so amount, purchased furniture, so and so, paid salary, paid rent, received amount. So what are they asking? Transactions entered show how these accounts will be affected. These are the accounts, how they are going to be affected is what they have asked. Are started business with. Let's enter into the accounting format. All the very best for the accounts. First, R started business with so and so rupees, keep rupees as well. The journal entry here is R started business. Business is, I mean, uh, separate entity concept. Business received the amount. R is you. You are the one who paid to the business, paid to the business, and business is something that has received the amount. Business received the amount that you have invested into the business. Okay. So business received the amount. What is the amount? Amount means cash. Okay, cash. What do we do with cash? What is the cash upfront? Is it income? We have received cash from our, is it income? No. Income is something which we do by sales. Is it expense? Of course not. Is it asset? Maybe. Is it liability? No. Is it capital? Definitely not. So what we have received is cash. What we have to credit is capital account. Is capital is liability. Check this. 5,000 invested in business. Basically, if you want to write this format explanation, just write as it is. What they have written in the question, write in the explanation. Accounts involved. First thing, cash and capital. Second thing, okay, accounts involved. Okay, purchased for furniture. Second, furniture is an asset that increases. Cash is an asset by which they have paid that decreases. I will explain it. Wait. Third thing, paid salary to his clerk. Salary is an expense. Okay. Salary is an expense. Increases. Clerk or not clerk. Cash is the way we are paid decreases. Fourth, expense increases means net profit reduces. Paid rent. Rent means renting. Rent means expense increases, net profit decreases, cash decreases. Fifth, received interest. Interest received. Received means income. Interest income increases, which is credit balance, net profit increases, cash decreases. Okay, this is what they have asked. If you want explanation, I will just give you. Take this. In balance sheet, I will explain how these are tallied. Capital, for example, if it 1 lakh, 1 lakh. Cash, 1 lakh. They tally. For this balance sheet, furniture, 1 lakh. Cash is reduced by 1 lakh. Okay. Since we have paid through cash. Okay. For example, 1 lakh minus 1 lakh, 0. This tallies. For this P&L to salary 1 lakh, which means net profit reduced by 1 lakh in balance sheet. Capital is reduced by 1 lakh. Cash is reduced by 1 lakh. Okay. I'm explaining the logic, not the numbers. Okay. If you apply the logic, the numbers doesn't really matter. Rent is the same logic. Interest is also the same logic. In P&L, interest 1 lakh increases. I understand my writing is also, yeah, increases cash increases. Which is why balance sheet always tallies. Okay, let's go to the question. How they affected? Increase, decrease, blah blah blah. Just to check this, okay. These are things you write on your own. Okay, question number one is done. Question number two. This is something we have discussed about this in, I don't know, the chapter, first chapter. Yes, I will pause for the time being. 35 minutes, okay. Let's continue forever. Illustration number two. What is the question? Capital loan. Okay. What is the thing they have asked? Develop accounting equation, right? And then they asked about the profit, reset the accounting equation and the profit and prepare the balance sheet at the end. I prepared the notes right away, so I'm going to um, write the figures based on the notes I've prepared. 1 minute. So this is what I have a few days ago. Mm, what is the first thing? Just working notes or a rough, okay? Mm, balance sheet, they have asked about opening balance sheet, okay? What did they say? Capital is 51,000. Loan is 11,500. Trade payables 5,700. Fixed assets are 12,800. Inventories are 22,600. Trade receivables are 17,500. Cash or bank is 15,300. The balance amount is 68,000. I got 96 getting offers day by day. What did they exactly ask? They asked about accounting equation. Why did we prepare? Because it will be easy for you. Okay. Accounting equation means asset equal to capital plus liability. All the assets equal to or is balance equal to capital plus liabilities. This is one, this is this is two, this is three. Just to remember the way we are using the flow of the question in write this. Okay. So basically 68,200 equal to 51,000 plus 11,500 plus 5,700. Right. That's it. And let me just check once again accounting equation. Question number two, opening 68,200, which is right. Liabilities 51,000. Equity, they have used the word equity. Equity and capital are both are more or less same. Not exactly, but more or less. Let's talk about closing balance. Again, prepare the balance sheet first. If you prepare the balance sheet here, the support of the answer, Sub part of question of an answer is going to come here also. This is working. This is answer because they have asked it. They have asked here, I guess, uh, prepare the balance sheet at the end of the accounting period. We are preparing the balance sheet. Capital account, loan account, trade payable, fixed assets, inventories, trade receivables, cash or bank. Okay. First, capital account. This is what they have not given in the question. See here, the capital is given as question mark, right? Loan is 11,500. Trade payables is 5,800. 12,720. 22,900. 17,500. 15,600. The total comes here is 68,720. The total here is the total here, which is where the balance always, okay? So then from this subtract this and subtract this, the balancing figure comes as 51,420. Okay, this is the second question. But they have asked about accounting equation, right? A1 equal to liability 1 plus capital 1. This is capital 1. This is equal to this plus this. This is x. Since we have not created, okay. 68,720 equal to 11,500 plus 5,800 plus x. If you solve this equation, we get a capital balance. After the capital balance, we prepare the balance sheet as per the question. But you can do this in this way also. Hope you are not getting bored. Oh my god, I love this illustration. After this, I think I'll take a break. So what did they ask here? They asked profit during the year, asset at the beginning, liability at the beginning, asset at the end, liability at the end, closing capital, total liability equal. Okay. Let's draw what they have asked. Okay. Basically, they asked opening balance sheet, closing balance sheet, but during the amounts of capital, they have given the twist. Profit during the year. What is profit? Capital plus profit. Opening capital plus profit. This is given as 5,000. This is subtotal. This is total. Assets at the beginning of the year. Opening assets. Assets. They have not given. Yeah. Liabilities at the beginning of the year. Liabilities. How much? 12,000. Assets at the end. Liability at the end. No. Capital. Liabilities. Assets. This is B, this is C. Did they give you about the closing capital 35,000? Total liabilities including capital at the end 50,000. This is what they have given. You might we actually solved the question of closing balances, right? Imagine out of 50,000, 35,000 is the capital. How much is the liability? 15,000. 50,000 is, I mean, the balance sheet always tallies, right? So this is also 50,000. Sir, how come is it so easy? It is so easy. It is a game of numbers. This is what I was looking for. Wait a minute. Yes. So the question is here, what comes here? First solve this. Once we solve the capital, we get these balances and this balance will be automatically tallied. Opening capital plus profit equal to closing capital, as we talked about this in the beginning of the chapter. So x plus 5,000 equal to 35,000, right? X equal to 35,000 minus 5,000. This is the second drive. I mean, like 30,000. So opening capital is 30,000. So the total is 42,000. Which always tallies 42,000, right? Sir, you have gone too fast. I did not understand anything. Please explain me again. Okay. Basically, we have written all the missing figures in diagrammatic way. Just to do this in equation way. Did they say an equation? Ah, yes, exactly. I will just write this later. First of all, they have given this and this. This minus this value comes. So this value comes first. Later I mean balance this out. So closing balance has no issue. For opening balances, we do not know the assets, we know the liability, but do not know the capital. So in order to find assets, which always tallies, we matched the we calculated the capital. Opening capital plus profit equal to closing capital. We have talked about this in second or third thing, right? For capital, I don't know. Oh, okay. For capital, opening capital plus profits minus drawings, blah, blah, blah. Plus capital introduced during the year, blah, blah, right? This is how we have done this. The illustration number 3 is done. Oh, wait. I will tell you the accounting equation. Wait a minute. Sorry. Because you do not write this like this in the examination. For closing balances, asset 1 equal to capital 1 plus liability 1. Asset 1 is X, capital 1 is 15,000 minus plus liability 1 is also X. Oh my God, sir. Oh, sorry, 35,000. Sir, we did not understand anything here. Okay, let's start from here. Just to, I mean, if the question comes very hard, just do like this. Just to do the trial and errors. Just to do not be stagnant. Do not be static. My God, I have solved the way this, and they have asked the reverse question. What do I do? Just answer the way you. I mean, you need to reset the mindset. You need to be flexible. So there are two values which I haven't come into conclusion by here, right? Wait a minute, I forgot. Okay. First we do with the A0. A0 means opening balances. Liability 0 plus capital 0. This is X liability capital. We figure out the capital. They have given us the liability. Plus we figure out the capital. How do we figure out the capital? Closing capital minus profit. So if you do this, you get 30,000. How did we get 30,000? This is what we are doing. So 30,000 plus 12,000 is 0 equal to 42,000. Okay. Now the capital is 35,000 and the liabilities and the total is 50,000. Capital is 35,000. Liability is 50,000 minus 35,000, which is 15,000. Since they are given this, assets equal to 50,000. C1 plus yellow. This is how you write in the examination. This is how I have explained to you. Now, concept of actually, I'm wondering whether to go with chronological order or topic-based questions. Anyway, I'm going to take a break of 20-25 minutes, please. I'm going to pause the video. Okay, okay. You to take break. I mean, okay. Anyway, sorry. Bye. Hello, welcome back. And let's continue the chapter one, chapter two, unit one. And another concept here. What is the concept perform? Okay. What do you, if they ask journal entries in the exam, just you should follow the format and the perform. Date, particulars, lecture folio number, amount, amount, which is debit, credit. Always remember whenever there is amount, write this in. Okay, remember this. So the question here is, oh sorry, wait, my hairstyle. Okay, it says traditional classification, golden rules. We have talked about this example. Just read the example once, please. Page number 2.17. This is the format. You can all skip this, okay? These are just explanations. I'm going to explain you in the question itself. Analyze transactions or so on. So for the month of March, for the month, for 1 month, okay. On the basis of double entry system by adopting double entry. What exactly is double entry system? Double entry system is for every debit there is credit. Right? It's double entry system. For every debit there is credit. It's just like Newton's third law of motion. For every action, there is equal and opposite reaction. That is how for every debit, there is a credit. For every debit, there is credit. So, if you remember the accounts, debit balances, credit balances, assets, liabilities, and capital, right? In these, if you debit something, we credit something, or we credit something. Or this is a game, okay? This is just a game. Debit, credit, liabilities, assets, right? If we if we debit something, we either credit something or reduce something here, vice versa. Just to draw this, okay? Same and in the same way, credit. Oh, wait. Okay. If we credit something, We either debit something or we reduce the liability. If you understand this logic, you are done with 70% of accounts. I'm talking very seriously. Okay. The logic is the most important thing here. This logic is the very most important thing. What is the page number? What is the page number? Page number 7. 8. 1.5 to 2 hours. This class might, the duration of this class might be around 1.5 to 2 hours. Okay. So the question number 4. Endless transactions are so on so for the month. First one, accounting equation method. Oh, yeah, sorry. Okay. First one, accounting equation method, and second one, investing your time. If these are fillers, if you do not like this filler, just skip this or fast for 1.5 or 1.5. Accounting equation method or traditional method. These are the two methods they have asked for. These are the transactions. These are the transactions. Okay. First one, illustration number 4. First one, accounting equation method. What is the first question? First thing they've asked. So, Sahil introduced capital through bank of 4,000 rupees. We have not discussed journal entries yet, I guess. But first of all, what is the accounting equation? Asset equal to liability less capital. So, in this question, Sahil introduced capital through bank. What is the asset here? Bank is the asset. First of all, what is the journal entry? Basically, journal entry, 1 minute, if it is possible. Yes, right. First of all, I'll tell you the logic of journal entry. Whenever there is an introduction, for example, Krishna introduced capital of rupees 1 lakh through bank check. Okay. If this is the point, I will just tell you the vague analysis of how to pass the entry. The point is here, the bank and the capital are the accounts. How do we choose? How do we choose the accounts? We choose the accounts. You get to understand this by experience over the period of time. Not if I explain to you, it doesn't really make sense. So bank balance is an asset, right? Capital is capital itself and comes under liability side. Whatever I'm writing, please write, please keep notes on this, but with better handwriting. So, in order to for an asset, bank uh, separate entity concept, bank sorry, not bank, cash has come to the business, cash or bank. Okay. So, since bank balance is increased and bank balance is an asset and bank for every asset is a debit balance, right? In order to increase the bank balance, we debit the bank. This is the logic. Bank account debit. How do we know bank is a debit balance? because bank balance is an asset. 2. Oh my God, what should we do here? Capital. We are talked about this. Okay, capital is to be credited. Why? Because capital balance is credit balance. If you remember, in balance sheet, capital liabilities, assets. We are talked about this just now. Asset is debit balance. If it is debit balance, these are credit balances. So capital is credit balance. In order to since I'll come again. Wait. Hello. So since capital is the credit balance, we credit the capital account. Okay. Bank is a debit balance, so we debit the balance, bank balance in order to increase bank account value, which is an asset value. 1 minute, I'm sorry. I've been getting interrupted so many times. Okay, anyway, let's fasten this up. In a haste. Okay, anyway, let it be. Someone introduced capital through bank, 4,000 rupees. What is the journal entry? Bank. Bank is an asset. Bank, 4,000 rupees. Sahil introduced capital. Credit balance. These both are credit balances, right? Capital, uh, capital, 4,000 rupees. Okay, let's speed up a bit. Okay. Cash withdrawn from Citibank. Cash, cash withdrawn from Citibank means cash balances reduces, increases, bank balance reduces, right? From bank. Okay, so bank balance is an bank is an asset. Bank balance is a debit balance. In order to reduce the debit, we need to credit. This is first one. This is second one. Bank minus 200, cash 200. So third point, loan of 500 taken from Y. Y. Loan is a liability. So taken from Y. 500. How did we take? We took by way of bank or cash. Let's say bank. So this is so it always tallies. Okay. In the fourth point, salaries paid for the month of March 2022, 300 and 100 is still payable for the month of March. Basically, salary paid is 300 and the amount of 100 which is excess is still payable for the month of March. How much did we pay? We paid 300 rupees. How did we pay? We paid from the bank. So bank balance reduces from our business, which is why since bank is debit balance, we credit the bank and in here we write the minus amount and then wait, outstanding salary, right? Still payable. What is still payable? Salary is still payable. Payable for the month of this month. Payable for this month, right? It comes in outstanding balance, I guess. Right. Liability, right? Yes, liability of 100 rupees. Since we have not yet paid, but we have to pay, it is our liability. We have to pay. It is our responsibility. It is our liability, but we haven't paid. So 100 rupees comes under liability. And how about the other 300, 200 rupees? Oh my God, this is minus. So it should be minus, right? But it is plus. So it should be plus 400 rupees. Sir, what did we do here? Uh, Salary, right? Should be minus, sorry. Sir, what did we wait? I don't know whether it is audible for you properly. Please comment me below, or I will just check the video. Sir, what did we do here? What did exactly we do? And why is it in the capital? Because net profit comes as salary is an expense in P&L. P&L salary 400, net profit reduces by 400 by, because since salary is 400, net profit obviously reduces by 400, and then in the balance sheet capital account will be reduced by 400, which is why this comes. Why is salary 400? Isn't it 300? Accrual basis. This is accrual basis. Is there any other entry? Oh, purchased furniture. Furniture is an asset. Furniture is an asset. How much is the amount? 500. How did we purchase? By bank. So if we check, it always matches 4,000, 4,000, 200, 200 nullifies, 500, 500, 300, minus 300, minus 400, plus 100, and 500, 500 nullifies. This is how, this is how blah blah is to be made. I mean, I don't know. And accounting equation is done. Now we come to traditional approach. I think we can do it in the book itself. Traditional approach can be done in the book itself. So what is the transaction? Just write all this. Write all. Okay, okay. Write all this in the transaction. Just come here. Introduction of 4,000 through bank by the proprietor. So in this here, keep analysis aside, affected bank, which is a personal account. Oh my God, sir, what are we doing here? Let's write journal entries itself. Keep the question with you, okay? I'm copying paste from the book, from my book I have done 2 days ago. So point number one is the entries bank account debit to capital. Let's keep money aside. Second entry is cash to bank. Why is the cash to bank? Cash withdrawn from the Citibank. So cash has come to the business. Since it is withdrawn from the bank, we have cash in hand. Debit to the bank balance is reduced, which is why since it is a debit balance, we are crediting. Third point, loan of okay, okay, I'll just copy paste. Final loan, bank account debit. Since we have since the amount is come as in our bank to Y account, since Y have given us loan. Fourth one is a complex entry. Let's keep fourth one. I said fifth one, furniture purchased. Furniture is an asset. Furniture account debit to, how did we purchase? We purchased by a, what is the fourth one? Fourth one I'll do with you. Salary is paid for the month of March, 300 rupees, and 100 rupees is still payable for the month of March 2022, right? Wait a minute. Is this right? Yeah, I think so. So in this journal entry, since salary is to be paid for the month of March 300 and 100 is still payable. Salary account debit to 300 paid, 100 pending. To cash to outstanding salary. What is outstanding salary? Outstanding salary is salary which we are liable to pay but not have paid yet. Okay, this is the journaling. Now, since it is a traditional approach, they asked about the bifurcation. Remember, anywhere if there is a bank, FD bank, I mean fixed deposits in the bank or normal bank, it is always personal account. Capital is liability, personal account. Just remember this. Balance sheet, real account, personal account, P&L, nominal account. Whatever accounts that come in P&L are nominal account. Cash, real account. Since it is an asset, bank, personal account. We are talked about is just remember bank account. Bank, personal account. Why? Is a loan, liability, personal account. So this is personal account. Salary, expense, nominal account, outstanding salary. Outstanding salary is a liability. Okay. We have not paid, but we have to pay. So it is a personal account, cash, real account, furniture, real account, bank, real personal account. Just read this. Okay. Oh. And wherever there is a personal, real, blah, 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 write the rule. Just read the question, read the answer again. Okay. This is the journal entry. Illustration 4 is done. Now we are going to illustration 5. What is the page number? 9. What is the fifth illustration? Okay, there are 15 entries here. Just to keep the question with you. Remember, always remember, whenever they ask you to write the journal entries question, you and should write in the performance, in the format. Plus, you should write the narrative. What is the narrative? I will write in the first answer, first point. So and so Ajit started business with capital 4 lakh rupees. Just for the first point, I will do the perform date, but I will not follow since it is time taking and the syllabus has to be completed very soon. So there is uphill task for me. The portfolio number, debit balances, credit balances. What is the first point? December 1st, 1/1/22. What is the particular cash bank I guess started with business capital. It is like ah oh sorry bank account debit, bank account debit to capital account. What is the amount? 4 lakh rupees. 4 lakh rupees. Being this is a narrative. Being capital introduced. Shall we do something? Wherever there is a need for the explanation, I will write in the book. Wherever there is no need of the explanation, I will just explain it in the PDF itself. Also, I will note, I will share this PDF. Okay. From the next class itself, I will not solve the problem here. I will explain, I will solve it before and explain it to you here. Okay. From if I take next batch for January or next May batch, I will write with you, along with you. Okay. Since I guess there is a little less time for us, it is better if I do not write and keep explaining this. We withdrew cash for business for the bank. Page number 25. Wait a minute. I will just pause the video and do something. I'll come back. Hello, I'm back. Let's first fast enough. Okay. For this bank account debit to capital 4 lakh 4 lakh. Your right narrative, please do not forget this. Withdrew cash from the business. If you withdraw cash from the business, then cash balances increases from bank. Okay, bank balances decreases. Cash balance is a debit balance. In order to increase the debit, we debit. Okay, so cash account debit to bank. Okay, I hope you have understood this. He purchased goods for making payment through bank. Purchases to basically for every purchase the entry is purchases account debit to bank. If you do not understand the concept, just to keep this in, we are paid through bank, right? So bank balance is a debit balance, and in order to pay, if we pay, the balance will be reduced. So in order to reduce the debit balance, we credit the debit balance, which is why bank balance is credited. And what is to be debited? Purchases. I hope you understood the concept of this. So fourth one, he sold goods. Uh, so for every goods, same logic. If I sell you the goods, my bank balance increases if you repay me, when you repay me. So bank account debit to what is basically sales. Okay, I will explain it to you later. So four entries are done. Fifth one, only for goods. Only for goods, we do not use the word goods. We use purchases or sales. Other than goods, we use that name itself as an account. Furniture, purchased furniture paid by check. Basically, furniture, what is furniture? It is an asset. It has debit balance. If you have paid cash, paid through bank by check, bank balance reduces and the furniture account will be increased. In order to increase the debit balance, we debit the account. So furniture account will be debited and bank account, since we have paid for the purchase of furniture, so our bank balance will be reduced. So furniture account debit to bank balance, which is the reason of us crediting the bank balance is because the bank balance is reduced. Same, he sold goods to Aravind. Okay, this is where the complication comes. What is the entry here? Aravind is a debtor. Okay, if there is a name, if it is paid by the bank, we say bank account debit. Bank account debit to sales, right? Since it is Aravind, it does not come under bank account. It comes under Aravind. Who is Aravind? Aravind is a debtor. Who is a debtor? Debtor is an asset. So Arvind account debit to sales. How much is the amount? 2,400. 2,400. If you have to understand how to write the narrative, just narration, just remember, for example, for this entry, just be like being goods are sold to the Arvind. That's it. Just write this. Being we sold goods to Arvind. Simple. This. He purchased goods from Amrit. Just what is this? What is this? I purchased goods from you. If I have paid you right away, my bank balance will be reduced. Since bank balance is a credit balance, if we reduce, in order to reduce the, sorry, since bank balance is a debit balance, in order to reduce the debit balance, we credit the balance. So, to bank, what are we doing? We are purchasing something, right? Purchase account debit. This is just, I have not paid the amount. Okay. I have to pay. I will pay in the future. If the question says there, if the question mentions the name, you have to remember that we haven't paid or we haven't received. He is a debtor, he is a creditor. Okay. Amrit or something. 10K, 10K. Okay. So for the next journal entry is oh my god, returned goods to Amrit. We purchased for 10,000 and we returned goods of 500 rupees. What do we do? What do we do? We purchased 10,000 and returned goods. Eighth one. We have to pay 10,000 to Amrit, right? Amrit is credit balance. He is a trade payable. He is a creditor. He has credit balance. We have liability to pay to Amrit, but we returned goods to him. Okay. So if we return goods, we do not have to pay the amount to the extent of the amount we return, right? So 500 we do not have to pay. So Amrit is credit balance. He is a liability to us. So in order to reduce his value, we are debiting Amrit account debtor 500 rupees to. What do we do? What do we do? What do we do? What do we do? Mm, maybe purchases or purchase returns. It is another account. Keep this in mind. Purchase returns comes here. Okay. This is a journal entry for 8th. He received goods. He received from Arvind 2,300 for full settlement. Full settlement. So how much he had to pay? 2,400. But he paid 2,300. Apparently, maybe there is a chance that we have given discount to him. We don't like it, but we have given discount. So, in order to close the balance of the Arvind is our debtor. Debtor means it is a debit balance to us. In order to close the debit balance, we credit the account. So, to Arvind, 2,400. Oh my God, sir, we haven't received 2,400, but why are you doing this? Because we have to close the account. Because we have to close this account. Okay. Okay. So how did we get it? We received bank account. We received cash. How much did we receive? We received 2,300 rupees. Sir, but this is not tallying. Oh my God, what should we do? What should we do? Maybe we should add discount account. 100 rupees. Okay. So narration, full settlement of Aravind uh, by discounting of 100 rupees. Done. So this one done, this one done. Withdrew goods for personal use. Purchase is debit balance, right? Purchase is debit balance. There you go. Here. Purchase account debit to bank. So, in order we withdraw goods for personal use. What are the goods? Goods that are lying with us. Okay. How do we get those goods? We purchase those goods and we keep those goods. Okay. These goods are lying with us. And we are using, and I am going to use these for my personal use. So, purchases. We purchase the goods. So I credit the amount balance. What do we debit? We debit drawing supply. Okay, remember this. We debit drawing supply. Uh, we withdrew cash from personal use. Switch to drawing to cash. Change this to cash. Sorry. Paid telephone charges. Telephone charges is an expense. Telephone charges is an expense. Account debit to what do we credit? What do we credit? What do we credit? Cash or bank. We pay telephone charges. Again, I'm telling you, we are paying through bank. So, bank is an asset to us. Bank balance is a debit balance because every asset is a debit balance. In order to reduce, we are paying through bank. In order to reduce bank balance, we are crediting it. It is a debit balance. In order to reduce, we are crediting it, and these expenses debiting. Sir, how about it in the traditional approach? What do we say? Debit all expenses or losses, which is nominal in nature. Telephone charges is a profit and loss item. Full settlement for 9,450. 10,000 minus 500, 9,500, 50 rupees we have taken discount from him. So for this entry, and with the account debit to cash to discount received, it is income to us. Paid for stationery 200, 5,000 in staff salary 2,000 from bank. So stationery account debit 200, salaries account debit 5,000. Sorry, rent. Salary account debit 2,000 to bank. Bank is we are crediting the bank. After cash account that unit, you will understand way more clearly. This is the most important entry. Just to start like this. If they want to trick you, this is where they are going to trick you. Goods distributed by way of free samples. Why do we give free samples? I mean, why do we exactly give free samples to someone? Free samples to someone. Why? Because in order to promote, in order to advertise ourselves. Advertisement. Okay, that's nice. What is advertisement? Advertisement is an expense to us. Expenses, P&L item. Wait a minute. Expenses, debit item, right? So we debit this. Two, two. Bank. What do we do? Forgot. Two. Oh, wait, right. Purchases. What do we what do we give goods? These are the goods that are distributed. What do we distribute? We distribute the goods that are laying in our godown. Okay, which are our purchases. So purchase is a debit balance. We are going to credit this in order to reduce. We are giving them for free. We are not going to hold them. If I hope you have understood this. This is homework for you. Please just do this. I'll give you a tip for this. Wait a minute. What is the page number? 10. We are going to page number 11. Just illustration 6. Just try the P&L first. Trading account, P&L account, balance sheet account. I will tell you how to roughly solve this. Okay. Building. What is building? Building is building is an asset. Building. Purchases. Sales. Bank FD. Remember, everything that is related to bank is a personal account. Just to keep this in mind. Rent, even then. Indirect expense to us. Rent outstanding. Liability. We have been talking about this. Cash. Asset. Purchases again. Adjusted purchase or purchase. We'll talk about this later. Closing inventory. Asset to us. Investments are assets. Trade receivables. Sales tax payable. Sales tax payable basically a liability. Okay. Discount allowed. Bad debts. Wait a minute. Yes. Capital drawings. Capital drawings. Interest. Wait. Interest receivable account. Interest receivable account. So it is an asset. Okay. Rent received in advance. It is a liability. Prepaid salary account. Prepaid salary. We paid salary in advance. Bad debts recovered. Bad debts here. Bad debts recovered is an income for us. Depreciation. We'll talk about depreciation later. Basically, it comes in P&L. Personal income tax account. Personal income tax. Personal income tax. Is it a liability or an expense? I'll just check. Wait, I'll have to really check. I think I forget. I think it is a personal income tax liability. I mean capital. Okay. Anyway, it is right. Liability or capital. So here these are nominal in nature. These are nominal. These are all nominal in nature. These are all personal in nature. Real account. Bank is related. Personal cash real. Closing inventory real. Prepaid salary real. Interest receivable real. investment real trade receivable person, because we in trade receivables there are people, okay, which is why it is person. Keep this in mind. Illustration number 777. What is it? What is it? What is it? I think you can do this at home. Yes, these are all normal general entries, right? Uh, capital bank to bank account, debit to capital account, right? Bought goods, goods purchased, purchases to cash, drew cash from bank. So we get cash and our bank balance reduces. In order to debit, okay, I have told you tens of times, okay, bank. Sold goods to me, goods on credit. Uh, I purchase, no sales. Krishna to sales. Bought goods from Shyam, purchases to Shyam, received from Krishna. So the balance amount 5,000 is discount. Okay, the journal entry is what is it? Bank account debit 1,45,000, discount account 5,000, to me 1.5 lakh. Allowed him discount 5,000. Okay, this is where they have to, even if they haven't told you about this, we know that. Paid sum. This is the same journal entry, paid cash sales. Okay. Wait, cash sales వచ్చేసి, so basically we are selling for cash. So our cash balance increases. Cash is an asset, cash is a debit balance. In order to increase an asset, we debit the cash to sales. Paid rent, paid salary. Rent is an expense, salary is an expense too. Or we individually pass the general entry also. We can also pass like this. Basically, there are certain advantages of doing all this stuff. As transactions are recorded in chronological order, date wise, okay, one can get complete information about business transactions on timely basis. So even if you want to find out what happened in 20th, we can find out. That is one benefit. Journal entries are the basis for posting in entries in the ledger accounts and reduce the chances of error. Okay. Basically, journal and this is the basis for preparing this. This is what they have told me about. Journal entry is the basis for preparing lecture entries and posting. Entries recorded in the journal are supported by note termed as narration. Okay, keep this in mind, which is a precise explanation of transaction. Okay, read this till here. And we have last topic. Okay, I will take a little bit break and we will continue the last topic later. Hello again. Let's continue with the concept of GST. Let's open the example. Sorry. So, what exactly is GST? GST, wait a minute. GST, right? GST is my lovely, lovely topic. And soon after this, maybe for November, sorry, May 27 attempt, I'm going to start GST for CA Inter. And maybe within a couple of years, I'll go for CA final also. It'll be, I love GST. It is very easy, very simple, and very interesting concept topic. Let's start with GST. What is GST? GST means goods and service tax. Introduced in 2017 July 1st, plus governed by. There should be a law for collection of taxes, right? The law is CGST Act 2017. This is all general information. You do not have to remember this. You will remember this after C foundation. So, what? How do we calculate GST, right? There is a manufacturer, and then there is a wholesaler, and then there is a retailer, and then there is customer. You. Sorry, something's in the mouth. Okay. So, manufacturer manufactures a pen. Okay. So for this pen, he obtained a cost of, wait, I wrote this. Cost of. Okay. Basically, keep this example aside for a while. Basically, GST means a seller, buyer. So for every business transaction, thus if a seller sells something to the buyer, for example, a pen of 10 rupees, the buyer has to pay GST to the seller along with the GST and the amount of pen. For example, if the seller says 10 rupees plus 5% GST. What is 5% GST? GST is an indirect tax. There are certain rates for GST. The goods that are categorized in those rates are these 5, 12, 18, blah blah. So whenever you go to a provisional store and he says 10 rupees plus 5% GST, what is it? 10.5 is 10 rupees plus 5%. 10.5. So you have to pay 10.5 rupees to the customer for receiving 10, right? What does he do? He pay this to the government. Customer pays to the government. How much does he pay? He pays 0.5 rupees. Did you understand the transaction? I will tell you again. Seller, buyer. Seller says a 1 lakh rupees of goods to the buyer plus 12% GST has to be paid. So buyer has to repay 1,12,000 rupees to the seller. So now seller has to pay to the government 12,000 rupees, which he has collected from the buyer. Ultimately, buyer is the one who is paying, but seller is the one who is paying to the government. Okay, so basically, government requires a government requires a seller to pay GST. Seller, what does he do? He collects from the buyer, right? This is the GST. And now there's a concept called output tax, input tax, so on so. I will explain you how it goes. So there is a manufacturer. Manufacturer manufactures a pen. For that his cost was 5 rupees. Uh, plus GST of 5%. He requires this to he requires this to be paid by him. Okay. What is 5 rupees plus 5%? Uh, 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 5 plus 5%. 5.25. 5.25. Just try to understand the transaction. Wholesaler with his profits, he 7 rupees. He basically 1 minute, 1 minute, 1 minute. I'll try to make this as clear as I can because this is the whole GST concept is here itself. Okay. Manufacturer sells manufacturer sells of rupees 5 a pen plus 5% GST. So basically 5.25 is to be paid by the wholesaler. So wholesaler, the cost for wholesaler is 5.25. So wholesaler sells it by wholesaler 7 rupees. 7 rupees plus 5% GST. What is 5% GST? The total is 7.35 rupees. So retailer 7.35 to the whole retailer pays 7.35 to the wholesaler. Retailer charges around 10 rupees. Retailer charges around 10 rupees plus 5%. 10 rupee plus 5% equal to 10.05 per 10.5 I guess is 10.5. So you have to pay to the retailer 10.5%, 5 rupees. This is the chain of transactions for any good itself. Here, the question is for the government. Let's keep this aside. Government receives 0.25 from manufacturer. Good. 0.35, which is 5% of 7 rupees. 0.35 from wholesaler. Good. 0.5 from retailer. Good. You do not pay GST. You already paid here, right? So this is the concept of GST, right? But don't you think there is something lacking in here? I mean, I will just erase the other thing. Okay. If you have not noted this, just go back to the video. Don't you think there is something odd in here? I mean, manufacturer pays 0.25, that's well and good. Wholesaler pays 0.35, okay. And then retailer pays 0.5, okay. So there might be some logic missing because let me put it this way. Manufacturer pays 0.25. Okay, it is well and good. In wholesaler, in 0.35 rupees, there is the amount of 0.25 also. Okay, because wholesaler also pays 0.25 along plus 0.1 rupee, which is why there are two things in here. For wholesaler, 0.35 minus 0.25. For retailer, 0.3, 0.5. Wait, higher. 1 second. For retailer, 0.5, 0.5 minus 0.35. This is 0.1. This is 0.15. So this is what the government is going to recover ultimately, because you are going to pay GST for think in wholesaler perspective. You are going to sell, going to pay 35 pies, and again you are collecting from, sorry, you are going to pay, you paid 25 pies and you collect from the customer and pay 35 pies. Okay, don't you find this odd? Because 0.35 plus 0.25, how much is this? 6. 0.6 is the GST. So if this is called cascading effect, cascading effect. Okay. So government is benefiting us here because government tells us, okay, you for the purchase of something you have you have paid GST, and by selling something, after selling by collecting from the customer, you are again paying the GST, right? So government is saying, okay, why don't you just set off your sale minus purchase? Basically, sale minus purchase in GST terms. I hope you have understood this, right? Sale is output tax, purchase is input tax. So sale minus purchase equal in GST terms. Output tax minus input tax in GST. This is exactly GST. Well, I hope you have understood this. What is this? What is this? Wonderful. Uh, Page number 13. I think many of the important concepts are well done and understood. Let's get to the questions. Before the questions, what is the relevance of GST here? What is the relevance of GST here? Because GST defines the journal entries. Write this, understand this, and keep this in mind. Purchase entry, sale entry. These are two things GST affects in our accounting system. Okay. In general, what is the purchase entry? Data, account, debit, to. Oh, sorry. My bad. Please don't tell anyone about this mistake I've done, or they will kill me. Purchases account debit to creditor. For sales entry, data account data to sales. If you understand the logic from what we have talked about in previous slide, what do we pay here? What do we pay to the whole? For example, you pay 10.5 rupees. You do not bother about whether it includes GST input or output. You pay this up, right? So The I will tell you the tip here. The tip is for creditor, it is always the total amount. Okay, basically in GST, the entry is purchases account debit. For purchase, the wording is input. Input CGST account debit. I will tell you another concept later. SGST account debit to creditor. Creditor is the total amount because we do not even bother to care about whether creditor is going to pay the GST or keep it with him or whatever he does. For us, we pay total amount to the creditor. For us, for our sake of clarification, we bifurcate to the input CGST, HGST. What is CGST, HGST? I'll tell you later. 2 minutes. Here, debtor is the total amount. Debtor account debtor to sales to CGST to SGST output. Output CGST, output SGST. So the concept, what is CG, what is SGST? There are two kinds of, in GST, there is a wording of supplies, okay? Supply means basically sales. There are two kinds of sales. If you sell within the state, it is called intra-state sale supply. If you sell across the state, which is in between the states, it is called interstate supply. Keep this in mind. For intra, there comes CGST, SGST. For inter, there comes IGST. Basically, uh, basically, if the percentage is 12%, for interstate, it goes like IGST at the rate 12%. For intrastate, it goes CGST at the rate 6%, SGST at the rate 6%. Why are we doing this? If you get this question, there is a whole new story, but we do not exactly have time to explain and dive into GST. This is enough for you for the time being. Okay. Already the class is around 2 hours. The time wait. My English is worsening day by day, right? If only I was consistent for you to see me day by day. 14. So let's get to the questions. I guess illustration 8 is illustration 8. So this is what we talked about. Intrastate, which is uh, in state. Interstate is between states. So here is the question. Purchased goods from Sahil 50,000 plus CGST, SGST 9%, 9%. I will just keep that study material which I just copy this. Purchases account debit to, oh, wait a minute, to Sahil, right? I told you Sahil is total amount. What is total amount? Total amount at 6. Purchase account is 50,000 here. We purchased 50,000 amount of rupees. Now they talked about input CGST account debit, input SGST account debit. Always remember, input is always debit balance. Input is an asset. Input is an asset for us. Okay, keep this in mind. The amount is 4.5 thousand. 4.5 thousand, which is 6% of 50,000, I think. Let me check. 50,000 into 6%. 6 by 100. 3,000. Okay. 9%. Okay, sorry. Right narration being blah blah blah. The second point is purchased goods from Sam Songs for 40,000 at a trade discount of 10%. Here is the twist. Always remember GST is calculated after trade discount. GST is calculated after trade discount. Okay. So again, the entries purchases debit input CGST account debit input SGST account debit to Sam, I guess. So here the thing is, yeah. So here the thing is 40,000 minus 10%, which is 36,000. 40,000 minus 10%, 36,000. I just explain you the entry from below. 36,000 purchases to 36,000. C input CGST, input LGST, 36,000 into 9%, not 40,000 into 9%. Start mark this. Okay. To 20,000 was paid immediately. So we paid cash to bank for 20,000. Balance for balance, it is the name of Sham because he is a creditor. Balance of amount 22,500. This is balancing figure. Did you understand the journal entry? Basically, basically, what is basically. Okay, sorry. I'm just wasting time, right? Anyway, basically, what they are trying, what is the journal entry is basically purchases CGST, SGST to creditor. This is the journal input CGST, input SGST. For purchases, there was trade discount here, right? So we reduced to 10%. For in CGST, GST also, we do it based on trade discount, not on the 40,000, 36,000. If you want, you can write here 40,000 and cancel it. Goods costing 20,000 withdrawal for personal use. Personal use withdrawal purchases. What is the journal entry? Drawings to purchases. If you have purchased to CGST to SGST, input CGST, input SGST of around 9%. Okay, drawings to 20,000 rupees drawings, 20,000 into 9%, 20,000 into 9%. This is the balance of paid rent to Gagandeep for blah blah blah. Okay. This is the same entry. Remove the purchase and use the word rent here. Rent CGST, GST, bank. See, I'm trying to fasten up. Okay. Please don't kill me. Goods costing 5,000 before trade discount of 10% return to shop. Such goods are purchased using CGST. Star mark this also. This is 15. This is the same question, right? Keep this in mind. I just record what I wrote in what I noted in the book. Sam account debit discount. Discount will not come here, I guess. Two purchases to input CGST to input SGST. Purchase return. Purchase return is 5,000 minus 10%, right? Since we have purchased for discount. Yep, 5,000 minus 10%. Okay. What is 5,000 minus 10%? 5,500, 4,500. 4,500 comes here into 9% into 9%. These are the balances and this is the balancing figure. If I am going too fast, just let me know, okay? Purchased furniture for blah blah blah. This is the same entry. This is IGST, remember. Whenever there is IGST only comes. Okay. Oh, wait a minute. There is a concept I need to explain to you here. Purchased furniture 44,800 including GST. This is the most important word. 44,800, right? So there is a rule number 35 of CGST Act 2017. What does it say? It says whenever there is GST amount included, 44,800, which is inclusive of GST, we have to do this divided by 112%. Is it exactly 112%? No, here is 12%, right? So the formula is 100 plus whatever percent they are asking. Okay. If you calculate this, 40,000 will come. This is the also the working notes, I guess. Here, okay. That is the rule that has been mentioned in the GST. Last entry is relatively easy. Purchased machinery. So machinery is an asset. When you purchase it is a debit balance, it increases machinery from so on. So for 1.4 lakh, place a CGST, GST, input CGST, SGST, paid 1 lakh immediately to bank. Since we paid, the account is debited. The balancing figure comes under Symphony Industries because the balance is to be paid later, right? Illustration number 9. Oh my god, there is so many. These are sales. We have, if you have observed, we have only talked about the purchases entries. For the sales entries, 50,000 data account data to sales, data account data to sales to output CGST, output SGST. Here bank account debit to sales out GST, output CGST, SGST. This is the balancing figure. This is the sale amount 50,000. This is 6% and 6%. This is the balancing figure. 1 minute, I'll come. Hello, I'm back for the second entry. Sold goods to Suchi for 28,000, including CGST, SGST. You by now you should know about this. Data account data to sales, Suchi account debit to sales to output CGST output SGST. Okay, this is the journal entry. Right? Yes, 28,000 including CGST, SGST, let's say. This is 28,000, I guess. Check my illustration number 8 or 9? Yes. This is 28,000 because it includes CGST. So the total amount, we remember that whenever there is data or creditor, it comes in the total amount, right? The total amount of 28,000 comes here to sales. How did we get 25,000? How did we get 25,000? Let me check. What is the percent? 6%, right? Uh, 25,000. Wait, 20, 28,000 divided by 112%. Equal to 25,000. Okay. So the rule is 28,000. The amount which includes GST divided by 100 plus 12%. 6 plus 6%. This is the logic that comes here, right? So 25,000 comes here, 25,000 into 6%. What is 25,000 into 6%? Into 6%. 1,500. Okay. What is the next question? Kapil was allowed rebate of 5,000 as goods supplied to him were defective. The rebate is separate account. It is not like purchase return. Okay. I mean sales return. It is not like sales rebate. So the rebate is a debit balance. Account debit to Kapil. Since there is a rebate to Kapil, right? Since there is Kapil is a debtor. Kapil is a debtor. Okay, we have missed this entry. We will talk about this later. Sorry, first we'll talk about this. Sold goods to Kapil 30,000, GST 12%, data account data to sales, Kapil account debit to sales to IGST, output IGST, received 12,000. Kapil account will be reduced by 12,000 and bank account will be increased by 12,000. Basically, bank account debit bank account debit, Kapil account debit to sales to output GST. Am I going too quick? Just let me know. Okay. Bank account debit 12,000. Okay. This is the balancing figure. What is the sale? Sale is 30,000. Output GST, which is 12% of 30,000. Okay, I think we have recent also. Received 25,200 from Surjit as full payment on account of 28,000. So 28,000 minus 25,200. I guess it is 2,800 balancing figure. This is the discount that has been received. So who is Surjit? Surjit is a debtor. So in order to reduce the balance of the debtor, we credit. Surjit is credited. That is obvious. What is debited? What has come? Cash or bank balance has come to us. So cash to Surjit. and then discount. This is the journal entry. Okay, this is done, this is done, this is done, this is done, and then repeat. Rebate, remember, this is mark this as important. Rebate is what is rebate? Rebate is not like sale return. It is a debit balance rebate to couple. Uh, okay, couple comes under total balance. Therefore, rebate. Let tell you, wait, the entry of rebate to couple, right? This is the journal entry. Rebate amount 5,000. So here output IGST comes percentage of 6%, 600, 5,600. This is the journal entry. Sold goes to monthly for 1 lakh at a trade discount of 20% charged IGST. Remember, discount will be on 80, IGST will be on 80%, not 1 lakh. Not 1 lakh. Okay. Monthly upon debit to sales 80,000 to IGST 80,000 into 12%. That is the general. And then this is also marked this. Goods of listed price 20,000 returned by monthly. What do we do here? Monthly returned goods. So sale return. Okay. Sale is credit balance. Sale return is debit balance. Sale return to Manpreet. Manpreet is a debtor in order to reduce his balance credit. Here we put output GST. Why do we do output IGST? Because Manpreet, there is a name. For wherever there is debtor or creditor, we put full balance, right? At the rate 12%. Now the fascinating thing is about the discount. So it is not a 20,000, it is 20,000 minus 10%, 20% discount, which is 4,000. So the sale return will be 16,000, but not 20,000. Okay. Received commission of 15,000. Commission, what is commission? Commission received. Where did we receive? In the bank account. So bank account is a debit balance. In order to increase, bank will credit it. See, will debit it. Bank or cash, okay. Bank account to commission. This is actual value. Output IGST, output CGST, GST 6%, 6%. This is the general number. Oof. And then there is a last question here. Record the following transactions in the journal, assuming CGST, GST 6%. Okay. Sold goods to Mukesh at the listed price 50,000 minus 20%. 50,000 minus 20% is 40,000. 40,000 Mukesh data account data to sales to CGST to SGST. These are both output. This is the journal entry. Mukesh to sales to output CGST, output SGST. Mukesh sales is 40,000. This is 6% each. The total is this is the balancing figure. Sold goods to Mukesh at the listed price of 1 lakh minus trade discount 20%, cash discount 5%. Always remember, trade discount is the discount that we show in the balances. Cash discount is the discount we show as an account. Okay. Sir, what is account? What is balance? I did not understand a word. Neither did I just wanted to sound cool, which is why I said balances in account. Sir, you said the classes are going to be very fun and interesting. Where is the fun part? The fact that I told you that this was funny is the fun part. Anyway, the journal and journal entry. Okay, mark this. So, bank account. Why did we get bank account? Sold goes to Mukesh at the list price of 1 lakh rupees. Blah blah blah. I think that we should get Mukesh here, not bank. Okay, cash discount, right? So okay, bank account. Here, bank account debit to says bank account. This is the first part. Bank account debit to sales. This is the primary journal entry. And then for the GST, you add this. Okay, keep amounts aside for the time being. And then there is a cash discount. Whenever there is a cash discount, we show discount allowed. Since there is cash discount, okay. Entry is done. Now the amounts. Amounts is the most important thing. What is the bank? Always remember for a bank, we always consider what is received in actually. Okay, 1 lakh. Wait a minute. Let's get to go to sales first. Sales and trade discount, which is 1 lakh minus 20%. 80,000 is the sale. This is the first amount. Okay, we got one clarity here. If we find this, we find automatically this. Output CBST GST at the rate 6%. Okay, these are done. Now the question is discount allowed, which is 5%. 5% of what? 5% of 80,000, not 85,600. I mean 89,600 into 5%. This is wrong. This is right. Sir, what are you even talking about? Discount allowed is based on this amount, not based on this entire amount. Okay, trade for basically discount, trade discount, cash discount, trade discount consider after reducing in GST. Don't reduce in GST. Write this. Yeah, what is the last entry? Sold goes to Mukesh at the rate list price of 1,50,000 minus 20% discount. 1,50,000 minus 20% is 1 lakh 15, 15, 30, 1,30,000. I mean 1,20,000. The Mukesh, basically the entry is Mukesh account debit. We will postmark on this point. Mukesh at the list price of 1,50,000 minus 20%. We do this in the new page number 12 of that. Mukesh account debit, data account data to sales. Sales is 1.5 lakh minus 20%, which is 1.2 lakh. To CGST to HGST. I will just check and let it, I'll just write. CGST at the rate 6%, at the rate 6% of what? 1.2 lakh. 7,200, 7,200. This is 1.2 lakh. Okay, this side is done and dusted. Now, they said this is the point that is most important. Note this. Out of the amount due, 60% is received, out of which 3/4 is received by check. Out of the amount due, 1 lakh, 1.2 lakh plus 14,400. This is the amount due. That is 1 lakh, 1 minute, out of which 60% and then 40%. 60% received, 60% received, out of 60%, 3/4 by check, 1/4 by cash. Out of 40%, it is not yet received Mukesh. So 1,34,400 into 40%. 1,34,400 into 40% is Mukesh, and then bank account debit, cash account debit. This is just a bit routine entry with a bit complication. Bank account is 1.344 lakh into 60% into 3/4, which is I will just write the amount. Okay, I will explain again. Out of 1.34400, they said 60% and 44. Somehow there is one bifurcation, right? Let's read again. Out of the amount due, 60% is received. Okay, so we are sure this is not received first. This is still the data. Then in 60%, 3/4 is by check, 1/4 is by cash. This is what they said. Okay. And questions are done here. Then we go to practical questions from now on. Just bifurcate this in traditional PR and accounting equation approach, asset, liability, capital, income, expense. This just bifurcate this. Sales tax payable is liability, which is personal account. Random take. Bank is personal account. Asset is nominal account. Is it an asset or a liability? Oh, bad debt is nominal account, nominal account, expense. This is what you have to do as a homework. This is just for practice. Now, the past the journal entries, they ask this second question. Is there any complication here? Wait, I will just, how many questions? 6 are there. 5 or 6 questions are there. Third question is, just wait. Third question is easy. This is also for homework. We'll do this. Assets equal to liability plus capital rate equal to plus x equal to plus x equal to x plus x. Just assume this and form the equation and do the find the solution. Fourth one is also the homework. What did they ask? They asked about whether the assets of the transactions, only the assets are increasing, or like purchased office asset is increasing, collected cash increase, goods sold on credit debtor increase, Withdrawal of cash by owner for personal use decrease. Right. Hide an employee as sales manager. It doesn't affect anything. Returned goods worth. Returned goods worth decrease. One of our debtor agreed with blah 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 who is a creditor of the same amount. With this entered into agreement. It does not have any adjustments since entered into the agreement to purchase but not did not actually purchase. Debtor agreed to pay his dues to creditor who is a creditor with the same amount due. Basically, the debtor is agreed to pay to the creditor, not directly without due. So, asset is decreasing, liability is also decreasing. Okay. Now, 2, 5, 6 are there. Question number 2. Past journal entries. Employees had taken inventory worth 1 lakh rupees, cost price 75,000. Consider this. On the Diwali evening, and the same was deducted from the salaries. So, salaries is expense. Salary account debit. 2. What inventory, right? Inventory. Inventory is what? Inventory is an asset. It is to be reduced, right? Inventory, they did not consider inventory as an asset, they considered as a purchase. Uh, yeah, salary to purchase. Okay, sorry. It is not inventory from asset. It would not reduce asset. We will do reduce asset later. Okay, but not like I have done a mistake. I did not do mistake, but they are wrong. Salaries to purchases. Why did we take purchase? It is the same logic as we discussed. Like we purchase something and we keep it as our inventory. What is inventory? Inventory is stock. Uh, Wages paid for erection of machinery. Here they have taken a presumption that it is of capital nature, capital expenditure. So whenever there is capital expenditure, we do not go. It does not go in the profit and loss. It goes in balance. So machinery to bank, not wages to bank, but machinery to bank. Since they have presumed that it is of capital expense in nature, keep remembering this. Why did we presume? Maybe erection of machinery increases the productivity of machinery. If you remember capital expense, if there is an increase in the productivity, it will be considered as capital in nature. Income tax liability of proprietor drawings. Yes, drawings is paid out the petty cash. Petty cash is asset. Reduce the value of assets. So, in order to reduce the value of assets, which is a debit balance, we reduce it by crediting. So, do petty cash by income tax liability. Sorry, drawings. Since it is a proprietor. Fourth adjustment, purchased goods from Navin of list price 2 lakh. He allowed 10,000 trade discount, 5,000 cash discount was allowed by 15. This is journal entry we have discussed for millions of times. Okay, just read this. Uh, Purchases to Navin. Consider discount. Navin to repayment bank. Okay, to discount received. So we paid less. Question number 2 is also done. I'm going a bit fast. Okay. If you have any doubt or if you want clarification, just let me know. This is also the game. First, I will check whether this can be given as no purchase of goods or other credit. trade discount. So basically, I will just give you the entry here. Purchases to Sonu. Sonu is 3 lakh minus trade discount 10%, which is 2 lakhs 70,000. And then CGST, GST comes here. Input CGST, input SGST. Of 6%, 6% comes here. Okay. Then this purchase is the balancing figure. If you get that, purchase, the numbers were different. Purchases, input CGST, GST soon. Those blah blah blah. They have taken the purchases. Wait, let me check. Let me check. I did a mistake. Purchase goods from the trade is gone. Okay, sorry. This is not this purchases come here. Purchases 3 lakh minus 10%. To Sonu via CGST, SGST. This is the general entry. This is how you can do it. You can do this on your own. Sold goods to so on and charges CGST, SGST out of amount 40,000 is received by check. If 40,000 is received by check, it is bank account debit. Goods costing 25,000 withdrawn for personal use. Drawings account debit to purchases. Machinery purchase, which is right, is it right? Yes. Machinery purchase from so on. So 2 lakh plus CGST, GST 9% use. Machinery, CGST, SGST to paid 1 lakh immediately. Bank 1 lakh to balance. Right. So on. So machinery 2 lakh. 2 lakh. 2 lakh into 9% is what? 2 lakh into 9%. Okay, I'm not that fast enough. I'll have to calculate here. 9%. 18,000. 18,000, 2 lakh 36,000, 1 lakh 1.36 lakh. The answer to this is 1.36 lakh. Oh, nice. Done. So there is last one question pending for us, right? Oh my God, this is so exhausting. Fresh page number 14, practical question 5. So the question is information provided by so and so for the year ended 2022. Additional English keep this aside. What are they saying? Basically, they are giving balance sheet. Just enter whatever they are given to us. I just copy paste from the book. This is the balance sheet, capital account, accounts payable, or trade payable. Okay, 1 lakh. This is given. And then loans. Machinery is given 1 lakh. Inventory is given 60,000. Trade receivables is not given. Cash is not given. Bank balance is given 80,000. And then they are given this total amount 14 lakh 15,000. Did they give something else? So any clue? Any clue? Let's 35,000 is a loss opening. Opening capital is given, loss is given. We can find a closing capital, right? Opening capital minus loss. Opening 10 lakh minus 35,000, right? Yeah. Yeah, got it. They are given something else too. Capital introduced. So 11 lakh minus 35,000. 10 lakh plus 1 lakh minus 35,000. 10 lakh is the opening capital plus 1 lakh is the capital introduced during the year minus 35,000. This is 10 lakh 65,000. This value is given. So this minus this. 14.15 lakh minus 10 lakh 65,000 minus 1 lakh is a balancing figure of 2.5. This is step one, this is step two. Note the numbers, very important. Whenever you are revising, you can focus on the numbers. First our focus should be here and then here. How did we find this? This is the step two. Out of this total balance, we reduced these two, right? And then 14 lakh 15,000. If there is one missing number, we can find it. There are two missing numbers. How do we do? Trade receivables equal to, we have given a clue to us. This is the Sherlock Holmes game. 15,000, 15 lakh 55,000 year sales, out of which 15 lakhs have been received. Sales equal to 15 lakh 55,000, out of which 15 lakh received, 55,000 not received, which is trade receivable. Here, there is a presumption that there are no opening sorry, trade receivables. Okay, keep this in mind. How do we get cash? 14 lakh 15,000 minus 80,000 minus 55,000 minus 60,000 minus 12 lakh 50,000 and 12 lakh. So the cash balance will be 20,000 and we are done with unit 1. Done. I'm going to upload. I'm going to start uploading this now. And I got successfully done with 1 unit. Today I will try to complete lectures and trial balances. They are relatively short. Okay. How much did I take that time? Where is the time? Oh yes. 2 minutes 40. Oh my god, it is nearly 3 hours. Okay. And then take care. Bye bye. I will keep on uploading. Do not worry. I will take care of your exams. If I'm going to first, just let me know in the comments. Please like, share, and subscribe. Okay. Bye bye.